Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone is doing well this Monday morning. I'm taking a quick look at, we looked, by the way, at the open yesterday during the Top Tier Outlook, which we stream on YouTube every Sunday evening at 6 p.m. Eastern, and not a lot of drama unfolding as we saw the Asian session open and react to the Friday sell-off. And different levels of support, quite frankly, that were hit as we ended OpX. OpX week can be an unusual one. This is probably the most pronounced pullback that we've had since probably April. And that's in the broader averages, mostly focused on the S&P and the NASDAQ, who, of course, have been strong now for the better part of a year. I would be very cautious, NAS gang. This is not the uptrend of Q4 of last year. This is not that move. I want to be really upfront with everybody. We need another catalyst for the kind of optimism that we saw through Q1, even through the latter part of Q2. I'm just kind of getting rid of these lines here. So this is not the beginning of the move. The move has already been going on, and now we need the rate cuts, and then we need to know how long the rate cuts will be going. So if you're thinking, Rag, is this the beginning of a fresh leg of uptrends? That would be great. But please remember, we've already made a dramatic move to the upside since really late Q4 of last year. So I would be far more cautious about rips to the upside because we're right at, we're waiting on those September 18 cuts. Now, this is not a time to be pessimistic. I just want everyone to adjust their expectations to the fact that we are now 7 months, almost 8 months into an overall uptrend where really only April was the shaky month of the year. So that being said, we still have rate cuts to come. We still have typically the bullishness of an election cycle hitting. But we know also that it's really been financials and regional banks, energy, and industrials that have made a pretty significant move this quarter, meaning Q3. So we're seeing a little bit of a shift in attention to the laggards of the year. Now, remember, S&P and NAS have been rip-roaring higher. So now we're seeing a little bit of more attention to the laggards like the Dow and the Russell, and they're being led by strength in their heaviest weighted sectors, KRE for the Russell, XLF for the Dow. The more energy participation we get, XLE, OIH, industrials, of course, healthcare, those will help the Dow the most, right? The S&P could coattail a little bit the Dow, but if the NAS stays heavy, the S&P is going to have to work harder to overcome the weakness that we saw last week in the four main cylinders of the NASDAQ. So NAS is bouncing a bit, but I would be really cautious with the NAS if you caught Top Tier Outlook last week. And of course, the Top Tier newsletter will be going out to our Sector Secrets Mastery members today. The idea here is, where is the strength now, not where is the weakness that I can buy into unless there is a trend. And I'll tell you, the sell-off last week in the tech, I think it makes a lot of sense to be very patient in those sectors and in tech. All right, that and by the way, put my money where my mouth is. We're long DIA as of Friday's close, and we're also long GLD calls. So Dow DIA calls and gold GLD calls. All right, let's see. Next up is what we have. Scroll. All right, XLF and AXP. All right, so yeah, let's do this. I'm going to bring over the XLF multi-chart, so bear with me. All right, so take a peek here. This is your financials ETF, and it is and that's actually this chart here on the left-hand side. I know the the time and the dates covering it up, but that's actually the XLF chart, the large one. So what's in an uptrend here, right? So we'll take a big look, and it's Berkshire, JP Morgan, Bank of America, Goldman, there's your American Express, Fernando, and Morgan. What you doing, puppy? All right, so, and Citi, throw Citi in there too. So what do I want to be cautious with? Visa is a big cup of nope, red candle. Schwab is in a downtrend, so I'm not looking to buy Schwab. MasterCard's wobbly at best, and Wells is about as bullish as a neutral chart here can get. So for now, I'd be patient with Wells. I'd avoid Visa, MasterCard, and Schwab. And that leaves, as you can see there, 7 names, and one of them absolutely is American Express. So there's a lot to like in financials. And that, of course, is going to benefit the Dow the most because that's the heaviest weighted sector in the Dow. All right. I am in CVS puts a month out, still looks bearish long term. What are my thoughts? Okay. So if I'm looking at about a 4-week time horizon, that's going to be mostly a daily time frame that I'll look to understand the structure of. So if I look at CVS on a weekly chart, I think CVS on the weekly is quite bearish. You take a look at why do I say that? What I see is that we're below the equator on the weekly. We're below the equator on CVS as well. So you'll see here that anything below about 68.20 is in the bearish hemisphere. And we're plotting neutral candles. And so would I expect CVS to head lower for the next month or between now? So here's what I do know. Do I know where CVS is going to go? No. We have earnings, by the way, on the 7th. So that will probably have a lot to say about what's going to happen over the course of the next 4 weeks. If the candles are in the gold zone, I would expect to find resistance. When the candles are in the gray zone, I would expect to find support. CVS is in admittedly somewhat bearish chop, but not in a downtrend. So if I'm going to project out 2 and 3 and 4 or plus weeks, I need a trend. Otherwise, my guess is as good as anybody else's. In chop, we're going to have moments where the bears are going to say yay. We're going to have moments where the bulls are going to say yay. And ultimately, we're going to stay within a trend. Within a range, probably around 62 to 56. What's going to break that range? Likely earnings coming up in a couple of weeks. All right. Let's see. Joe says, I heard Buffett sold some BAC. Okay. What are my thoughts on Netflix? All right. So Netflix, bearish, red candles. Yeah. Had earnings, usually moves oddly afterwards. Yeah. I think a lot of stocks tend to have a lot of volatility in the aftermath, at least of the earnings release, and then 1 to 2 sessions after. Agreed. What I would say is, what is the movement, right? So it's bearish. It was bearish before earnings, by the way. I think it's important to note that by the 11th, we were already plotting those red bearish candles, a couple neutral candles. So I would, if you're a fan of getting long Netflix, I mean, look, you might get a nice mean reversion around 593 and a half. You might get some near-term support around 620. That would be more the weekly time frame, and the weekly is still in a gorgeous uptrend. But as far as the daily goes, something with a shorter time horizon, as opposed to the weekly, which has a much, much, much larger time horizon, I would just say let the dust settle on Netflix. Just give it a minute and let the dust settle and figure out what it is that buyers see as value. If you want to look at it that way, 626 would be another level to keep an eye on. 626, but we will have a red candle at 626. So I would exercise a lot of caution, smaller position size and or tighter stop. All right. So that's what we've got there on Netflix. Let's go take a look at what the NASDAQ is doing intraday as we go into the open here. So every morning from 9:30 to about 10:30, I focus on what are those levels that I can day trade from? What are those places where the structure is good, the clarity, the levels are being hit, and how can I set up day trades between 9:30 and 10:30? And I would definitely say the NASDAQ would be a candidate as a day trade. I may not like it as a swing. I may not like the longer term, but I would say definitely I would focus on the NAS to the upside on a pullback. I typically like to let the first 10 minutes, at least 5, but up to 10 minutes go by, just to let the bell and sort of that chaos and all those pending orders that'll get hit on the bell. I like to let that settle down, because we know this pre-market trend, which has been quite strong in the NAS, we can see a lot of drama unfold in the first 5 to 10 minutes. So I just assume that get out of the way. And in this case, once the opening trades, that opening salvo, if you will, kind of calms itself down, are we near 19.9? Are we near 19.850? Do I have a mean reversion? Do I have an hourly price movement range buy? And as long as the trend is up, and as long as we're trading above the previous session close, I'm going to have a bullish directional bias. All right, what about the S&P? Is the S&P coattailing the NAS? It is right now. The S&P is indeed coattailing the NAS. So we can see here, this is what a mean reversion looks like, right? We can see that triggered pre-market 8:50 a.m. Eastern and 8:55 a.m. Eastern and 9 o'clock. Once the bell rings, if we can maintain this uptrend, which is already starting to wobble, by the way, I'll take a look at whether some Darvis levels at about 55.80, or even the hourly price movement range down at 55.73.5. Could some of these levels be in play? And it might seem really far away until we get there, right? Buy the dip always sounds crazy to say when something's making a new high until we get the dip, right? Okay, Russell does not have a trend on the morning as we go into the bell. We're still 18 minutes away, granted, but no trend right now on the 5-minute. Nice trend on the daily. I would love to be long IWM calls on the daily time frame when those green candles meet the gray. And then the Dow, you can see here a lot of chop, not in any way the kind of clarity that we're seeing on the NAS and the S&P moving higher, but that's okay. I mean, we're above the previous session close. That puts it in the bullish hemisphere. We're above the equator, which is down here at 40,582, again in the bullish hemisphere. I just need to see where the floor is going to be, and it looks like the floor is likely going to be somewhere in the vicinity of 40,607 to 40,006. And as long as those levels hold, then, and we're above the previous session close, I would expect higher highs in the Dow. But as we mentioned before, this thing right here, financials, Bank of America, JP Morgan, Berkshire Hathaway, some of the uptrends that are in XLF, this is going to be a big part of that. Can XLF keep moving to the upside? Can XLI continue to move to the upside, although it's been wildly erratic? XLV would be another one not to overlook, right? So if those, specifically XLF, if it can keep moving higher, we're in a good spot in that regard. Okay, next up is CCJ. So to look at CCJ, I typically look at URA, HedgeMate, and URA is kind of turning into a mess on the daily. Let me move this over. Kind of moving into a bearish mess. I say mess because it's choppy. I don't care if it's a downtrend or if it's an uptrend. Trends are great, trends are clarity, but this is no longer a trend, but it's a bearish chop. So I'd be very cautious on URA. And then that typically maps to CCJ. Not always, but you can see that a lot of times what happens in uranium will affect Camco Corp. And in this case, we're still above the equator, but it's heavy. So if anything, it would be a short swing when a red candle meets the gold zone, right? Not a long swing. Long, I need the gray zone. Long, I need at least a yellow candle, preferably a green. For shorts or for long puts, the yellow in the yellow or the yellow in the gold, that's fine. Red would be better. But right now, I don't have a long trade. And I'd like to see that kind of alignment, right? It's no different than if I were looking at Newmont Mining, for example. I would start at the top of the food chain. What is gold doing? And then what is GDX doing? And then lastly, what is Newmont Mining doing? And that's the alignment I'm looking for. Not everything's going to have alignment where you've got a broader market like a crude or a gold affecting oil stocks and gold miners. but often you will. So I find that my best follow through happens when I look at the entire food chain from top to bottom and I see, oh, okay, there's alignment, right? That's what I don't have in the NASDAQ right now for a swing that I would like, which is Apple, And ultimately, when I look at something like Apple, I realize I wouldn't mind buying it, not one bit. I would like potentially to get long. I don't have much time to earnings. It's inside of a week now. And so I not only have a truncated time frame due to just the limited time to earnings, but I have the major problem for me is not that Apple isn't strong. I think obviously it's going to open up around 227. It's not that it isn't strong. It's going to have to work so much harder in many ways to overcome what's been happening in the NAS. So that's not necessarily alignment, but this is a relative outperformer. So then you say, well, if the NASDAQ takes off and XLK is strong, what's the best candidate? That's Apple. That's watch list building, gang. Not finding something that's really cheap, right? Or in downtrend, expecting it to rally, but finding something that's strong and expecting it to either follow the index in the sector or outperform the index in the sector. All right. Tyler asks, DLTR shorts. Yeah. So here's your zone. DLT shorts would be a mean reversion at basically 107. If you want something a little bit more moderate in terms of waiting for a higher high, it'd be about 108.70 and then about 109.40. But your first opportunity for the mean reversion is going to be about 107.20, that area, maybe a little bit lower if you want to be more aggressive. But yes, I needed to at least cross over 107. And then you can see it's in the mean reversion, downtrend, red candles. And that would be something that if you're looking at downtrends, if you're looking at weakness, and definitely weakness that may not be necessarily tethered to the broader averages. There are certain stocks that just don't have that much meaningful weighting or influence from the broader averages. That's not uncommon. So what I have here on DLTR is, probably something that doesn't really care if the Dow or the NAS or the S&P moves higher. Probably doesn't care. And it could just keep doing what it's doing on its own volition. So that would be a great candidate. I agree, gang. All right. So that's what I've got going on here this morning. Let me take one more look at gold and bonds, and we will wrap it up. Bonds are in a neutral environment, inside candle from last week. I'd love to be a buyer in bonds. We're in the bullish hemisphere, mostly green and yellow candles, and that would be long TLT. And when bonds are moving higher, I generally like to play gold to the long side too, which I mentioned we've already done. And that's a green candle in the gray zone. And that was, this is the baby steps into futures trading for those of you that are wondering how to get there. Watch GC. Watch your setup that you would like to trade gold futures on. Once it gets there, either by options on gold futures or by options on the GLD, I would recommend the GLD. And do this for a while. Watch gold futures, trade GLD puts and calls. And do that until you get a feel for the kind of rhythm, range, right, that gold is capable of doing with leverage, right? Remember, GC is a leveraged, very leveraged futures contract, as most futures contracts are. And to start with futures is usually a very difficult thing because you've got to have spot on, ready to go position sizing and risk management because these things can get away from you very, very quickly. Not to mention the margin on some of these, especially overnight, specifically overnight, can be quite high. So GLD is a great way to look at it. And so we've got GLD calls. Yeah, we've got GLD calls to kick off the morning. It's not built on this GLD chart because remember, it's built on this thing. So GLD is just to choose your own adventure into the position. And you can see it looks so dramatic on GLD when in reality, we're trading around where we closed on Friday. All right, gang, as always, thank you so much for being here for Charts and Coffee. I will see y'all tomorrow, same time, same station. Be good to each other.